What's going on, everybody? It's May 22nd, 2023, daily log episode number 6, volume 2. Today we're going to cover ES and the price action unfolded. So off of the weekly forecast from yesterday, and if you didn't see that, it's inside of the Telegram. I don't upload those to YouTube, FYI. I only post those in the Telegram, so make sure to join the link below. I'm usually talking a lot on there. If you saw today, I was really just tape reading today. If you go back on the Telegram, I annotated how the relative equal lows were likely to be targeted. Now, to note, I also noted the buy side, and I'm very much I'm not an advocate of people boasting about draws on liquidity. And the reason I say that is because draws on liquidity are fairly easy, but if you're not able to execute on them, then I don't think it really means much. So yes, I did say to watch the relative equal lows. I was walking you guys this morning how YM was decoupling and how you should be paying attention to that and how we should be waiting for the silver bullet hour rather than looking at the first 30-minute window after the open. And that's mainly due to how last week we closed coming into Monday and kind of being uncertain of where the dollar wants to go. And when you're watching that first 30-minute, open and YM is making lower lows, NQ is making higher highs, and ES is stagnant and dollar stagnant, that to me at that moment, it creates lower probabilities. So you have to understand that. You have to see it in real time. And if you're not able to watch all that data, I think you're doing yourself a disservice. So if you can, if you have the funds, I would definitely invest into, some cheap monitor or something to be able to watch all of that data at once, because it is a huge indication. And it's the reason why I leaned on the relative equal lows to be taken out. So I want to make note of that. Looking at the daily time frame here on ES, we came into that fair value gap we talked about yesterday and on the weekend. We've been expanding higher. So I've had a few people I've talked to how I was suggesting that the low of the week could possibly be in. And that is a pretty unique weekly profile for Monday to set the low of the week. It was honestly Sunday setting the low of the week. And it is unique. But I don't think that you can look into it that deeply, because to me this week can get very animated, meaning that we could see these buy stops be taken and then we could see lower prices. So I wasn't really necessarily saying that the low of the week was in, but indicating that Friday we had a retracement back down, and this is the last point of interest. This has to be the last point of interest if we're going to see higher prices, which we are. Even the fact that right off the open today we're already seeing higher prices and pretty good volatility, it indicates to me tomorrow is going to be a carnival ride. There's going to be a lot of manipulation this week. Like ICT said, has a lot of landmines as far as the economic calendar. So you have to be aware of that. You have to be aware that there's going to be a lot of volatility. There's going to be a lot of manipulation. So you have to be very, very patient. You have to be very certain of your setups, and you have to understand when to wait for the perfect time. And the best bet is to wait for the silver bullet, waiting for the right criteria, and that's going to save you a whole bunch of capital and mental capital. Looking at the 4-hour time frame, I'm still leaning on the exact same bias as we left off last night. Is we came out into this 4-hour wick here. You split that in half. Wicks will act as gaps. And if you go down lower time frames, I annotated how this is a bullish order block. And we're expanding higher from here, which is good. We want to see higher prices in here. I'm going to lean on a bullish bias until 42.45. Once we reach that area, I'm going to have to reconsider where price is at and what we're doing at that particular moment in time. But until then, I'm going to lean on the idea that we're going to go gravitate towards 42.45. Obviously first 42.27. The 1-hour time frame, we dropped down into a discount. We completely filled in this fair value gap, and we're rejecting off of these 3 down close candles, which is our bullish order block inside of a discount. We gapped lower, creating that new week opening gap. And then today we saw a lot of manipulation. And if you're looking at the 1-hour time frame, we had a 1-hour SIBI in here. So I said if we close above this, then we can utilize that as potential support for us to continue higher. So watch this overnight and even tomorrow morning session. If this is taken out by the morning, maybe problematic. We'll have to see. looking at the 30-minute time frame today, I think the body was telling the story here as far as why we should see lower prices. Again, we drop down into a discount. We have our fair value gap supporting price in here with our bullish order block. We have a bullish structure, dealing range low to dealing range high, dropping down into a discount, seeking buy side. 15-minute time frame. There wasn't a whole lot to note in here, but if you plot your new week opening gap, so we have 2 resting in the same area. I actually have 5 on a look back right now, and this is residing in the same area. So this green one is the current new week opening gap, and that's most important to me, just because we're going to utilize that a lot this week, and it's fairly large, which I particularly like. I like larger new week opening gaps. Dropping down into a 5-minute time frame. Looking at the open here, there was a premium SIBI up here, and price retraced into that. So right off the open, we saw bullish expansion. And if I replay this back, this is why I think the silver bullet hour is such a phenomenal hour to wait, because a lot of manipulation can happen in the first 30 minutes, and you can get kind of suckered into false moves, and it can prevent you from basically FOMOing into a trade. So for me, price was taking out buy side liquidity in here. So we have all these relative equal highs. Even that high there, we're taking out buy side liquidity. NQ is making a higher high and Dow is making a lower low. So immediately when the market is decoupled like that, and what that means is all of them are doing something completely different than each other. So again, YM was making a lower low, NQ is making a higher high, and ES was stagnant. It can all be rearranged differently depending on the conditions, and including the dollar wasn't giving much information as well. So that's why I immediately noted how you need to be patient and wait for more clear direction, and one of them will eventually lead, meaning one of them will lead and the other ones will follow suit. So YM was the leader, and then NQ followed suit, and ES followed suit as well. So in here, we retraced into a premium PD array, which is our fair value gap, resting inside of a premium relative from that dealing range high down to the dealing range low, returning into a premium, taking out buy side liquidity. And I noted pre-market how we had these relative equal lows in here. If you take out the new week opening gap, these relative equal lows in here were problematic for me to even go long in here, because if you're leaving relative equal lows prior to a huge displacement like this, it makes me very weary. And considering the new week opening gap, considering the economic calendar, I wasn't expecting price to really expand like this. So I did say to note the buy side liquidity, but as soon as I saw the decoupling, it was immediately neutral until I found further information or one of them started to follow suit with each other. So I could see how, if you're newer and if you're not used to something like this, especially a Monday, I'm very weary of price, is how we displaced higher right off the open. And this can make you want to jump into price right away. And it's designed to do that. And I've been caught up many, many times doing this, where price will displace higher right off the open. And this was in line with what we wanted, at least as far as the weekly forecast. But you have to understand time, and you have to understand basically the day of the week, which is a Monday, and the economic calendar. So for me, you're taking out buy side liquidity, things are decoupling. It's a Monday. We have a lot of economic news ahead of us. I'm suspecting a lot of manipulation. So once I saw this, to me, I'm not trying to go long in here. I'm going to wait for price. And if I miss something, then I miss it. The best bet, especially if you're unsure of price, is to wait for something like this to happen, where you have a displacement out of a higher time frame point of interest, and it shows you enough evidence that I would want to go higher. So it would be displacing higher in here, leaving a fair value gap, showing bullish respect to bullish PD arrays, and then you could enter in long, and that will secure you a little bit better opportunity rather than jumping in here, okay? And even privately by myself today, I'll jump down into a 1 minute time frame. I was annotating how I was going to be able to basically forecast how to get into position, because in here it seemed 50-50 to me. I could have easily seen price jump into this fair value gap and then displace higher into the buy side liquidity. In hindsight, of course, it's very easy to say that we were going to the sell side, but in real time, it's not like that. And don't let anybody fool you. So in here, what I'm doing is immediately when I see the decoupling, I'm basically sidelines until something shows further evidence that it's going to lead. And you can see in here, there's a discount fair value gap in here. And most importantly, we're waiting for the silver bullet hour, which this is my silver bullet time window in here. So we'll just make that blue. Let me make this visible on a lower time frame. So you're taking out buy side liquidity, we're turning into a premium fair value gap. We're displacing lower. At this moment in time, I'm watching this fair value gap and I'm seeing, okay, do we see a large displacement away from this? And I would have needed a closure basically above the SIBI and everything else to basically get into alignment with a bullish bias in order for me to even look for longs. Like I said, it's not that easy to sit in here in real time and be able to decipher this. In hindsight, it's very easy. And that's why I don't think backtesting serves people very well. And people ask me about that all the time is backtesting. You can definitely find a lot of setups and practice a lot. Don't get me wrong, but I think real time analyzing it, putting your thoughts out there is going to serve you a million times better. So in here, we saw a displacement away from it. And this is again in the 5-minute fair value gap as well, reaching down into a discount. And I was watching this balanced price range in here and I was seeing if price would displace above it. And if that did happen, then I could potentially look for a long opportunity if other things were in correlation with it. And this basically stopped price dead in its tracks. So for me, this is a balanced price range. We have one pass here, second pass in here. There's no trading done in between here. So we can expect this basically to stay open. If you have a balanced price range, you won't really expect price to dip up into premiums or discounts or price to fill in for value gaps fully. And in real time, I'm still waiting for the silver bullet hour. So we still have plenty of time and I'm letting price prove itself and letting time do the work for me. So I actually did this. I wish I recorded it, but I said if we displaced above here, this acted as support, then I could have looked for a long opportunity. If we broke lower, we came underneath this BISI in here and something set up, then I could go short. So this in real time is what I was doing. I made these exact same annotations, and this may seem 50-50, but what I'm doing is I'm letting price prove itself. I'm letting time do the work for me. And rather than me guessing in here, going long or going short, especially with the decoupling, especially with the time, everything is not in my favor. So I'm letting everything else do the work for me, and I'm putting the odds in my favor. So hopefully that makes sense. It's personally what I do. It's a huge tip for me, especially when I'm unsure of price. To me, it's not guessing. It's not 50-50. It's just letting time do the work, really. So immediately I saw this displacement lower. At this point, the bearish or bullish bias is no longer valid because to me, if we were going to displace higher, it should have done it in here. So in hindsight, yes, this looks like an amazing shorting opportunity. But if you're not looking at the other factors, such as the decoupling, such as dollar, this to me is a very low probability shorting opportunity because I could have made the case at this moment in time for both ways. So I think it's the best to wait for something to prove itself. Now, price left this fair value gap in here, which is a balanced price range. If you take this in here, we're still not in the silver bullet hour, but we're right before it. I think this would have been a fine opportunity to go short. And then we saw this displacement lower in here. And ICT annotated his trade in here. There's a small fair value gap, which is your silver bullet. And I annotated at 8:57. If you look at the timestamp in the Telegram, 8:57, I said, note the sell side at 41.96. So at that point in time, when I saw this displacement lower, I immediately invalidated the long bias. And I said, okay, then I'm going to look for shorts to see if we can get into the sell side liquidity and see if we can tag the new week opening gap. Price retraces up into the new week opening gap. And then we saw this nice displacement lower. This only took about 2 minutes. This is a nice low resistance liquidity run signature right into the new week opening gap, right into the CE of it, which is the 50%. You can see the body's beautifully respecting it. And this is what right inside of the new week or the silver bullet hour. To make note as well, if you toggle to regular trading hours, we had our RTH gap in here. So this gap in here, if I go back to electronic trading hours, you can't see that. So with RTH gaps, you want to see those filled or price gravitate towards them to fill them. So that would also be in alignment with the overall bias of going short in here to fill that gap. So I'll go ahead and make that orange. You can see how price filled that. I'll drag it over. And at that time, NQ made a higher high. Dow was leading. So that's a bearish divergence coupled with this. I didn't take this trade. And the reason being is simply, excuse me, with indices. I understand what asset I'm trading. And if I was trading futures, I most likely would have taken this trade. The reason why I didn't take this on my account, which I'll show with full transparency, is due to the reason that spread and kind of the range with my stop loss. I don't particularly like taking these type of 1 minute setups on indices because with spread, your broker can very likely reach out with spread and take your stop loss. And if you look at ICT's stop loss, it was right above this high here. And it's not far away from where that price would have been and where spread would have been. So to me, I have to elect to trade a little bit higher time frame model with indices. And that's the reason why you see me being a lot more patient with this account, is because I understand the asset that I'm trading. If I was trading futures, then I would have been more than happy to take something like this. And it's the reason why I'm not going for 5 handles. I'm not going for these low objectives with indices, because with spread, it's very, very difficult to be in and out intraday scalping with indices. You have to understand that with spread, if you're trading, something like a indice prop firm challenge, understand that, because you can't do the same things you would do in futures. If I had a futures account, then yes, I would have done this. So that's to make note in there. And as soon as we reach down into the new week opening gap, I said I'm flat, which means no trade, no bias, I'm done. And the reason for that is we have buy stops being taken out, sell stops being taken out, and us returning into the new week opening gap. So at that point in time, it's a seek and destroy profile where you're taking out buy stops, taking out sell stops, returning into the new week opening gap, which is basically seeking for value. And at that point in time, I'm done. There's no reason. I'm not going to chase price. I'm not going to look for anything else. I'm done. That was the best opportunity, was to get in here. And if I didn't, then I missed the overall move for the day. And that's going to happen. And you have to understand, like I said, the account that you're trading, the asset that you're trading, and understand the rules and the risk parameters around it. So hopefully that makes sense for today. I know ICT covered it, and I hopefully was able to provide a little bit more clarity. And you can see here, the best thing for me today was understanding exactly when to stop looking at the charts. Was immediately when we reached the new week opening gap, I said, I'm done. I'm flat. There's no reason to pay attention to the charts anymore. There's no reason to seek anything else. That's the best thing you can do as a trader, is knowing exactly when to be done with the charts and know when things are not going to be in your favor anymore. I can't stress that enough, really. So after that, we basically traded aimlessly, going sideways. PM session was really not fruitful. I was paying attention to it, seeing it at the silver bullet PM session hour, if anything would, come into fruition. But all of this looked like a sloppy mess. I didn't want to be a part of it. I didn't see a reason for anything else. There was a decent shorting opportunity if you're trading futures, but to me, it still wasn't the best. I would have rather liked this high to be ran out and that's us to displace lower. You can see in here, this is the silver bullet hour for PM session. Right in this window of time, price takes out. If it took out buy side liquidity, that would have been the best opportunity. Then displacing lower. We have a shift underneath that low there, leaving a fair value gap, volume imbalance in here, retraces up into a premium, and then displaces lower, attacking sell side liquidity, and then attacking a discount. So to me, it's not the best PM session silver bullet, but it was there. There is a fair value gap in here, just to make note of it. So let me touch over the dollar really quickly. Let me go out to a daily time frame. So I don't know for a fact what's really going to happen with the dollar. I could see both ways in here. I know yesterday I was leaning on a bearish bias. I would prefer that. particularly due to the reason I want to see higher prices in ES, but things can be decoupled. We saw last week how Wednesday and Thursday dollar went higher, and same thing with ES. So it may be just a standalone analysis this week with ES, and dollar can do whatever it wants. I would prefer it to go lower, but I'm really not seeing really good evidence of that. So we could seek the buy side above here. I do have one more fair value gap inside of a premium up here on the 4-hour that price could gravitate towards. Looking at the 1-hour, rejected off of this bearish order block in here. I annotated the fair value gap, but we closed above that. So my eye immediately went to the order block. This would have to hold, obviously, for us to continue to see lower prices. We built up sell side in here. I just don't know with dollar. I would rather really not put a lot of emphasis on it this week unless things kind of get in correlation with ES. Like I said, things can be decoupled, but yet you can still trade ES. So it may just be a standalone analysis this week, which means I'm only really looking at ES and NQ and YM. The last thing I kind of want to cover was EU and GU, because these are heavily correlated with the dollar. And I still see lower prices in EU and GU. So to me, that would kind of suggest that the dollar wants to seek higher prices. So we're going to have to see. I don't see any reason for EU to go higher in here. There's nothing inside of a discount that it's reaching into for it to go higher. And it's just respecting bearish PD rays and gravitating lower. And there's really nice sell side liquidity on EU down here. So we could just see lower prices in EU and dollar continue higher. And we'll have to see what happens with ES. Same thing with GU. I talked about this, I think, last weekly forecast, but small inversion for value gap in here, coupled with the SIBI. We just IOFED'd it last week, and then we saw displacement lower. So I would still prefer the sell side liquidity on GU. So that's a little bit conflicting with me with the dollar as well when I'm looking at EU and GU, trying to gain a little bit better clarity. So we'll just have to see. Be very wary of the economic calendar. Be very patient this week. Wait for your time. Silver Bull is the best bet you can do for yourself, waiting for the best setup and having all the odds in your favor. So let me pull this over real quick. This is the account. Nothing's happened. I didn't take any trades today. Transparency, still left off exactly where we were at last week. So we'll see what happens this week. Like I said, I'm being very patient with this account. I don't really care. I'm not pressured with time. The reason why I chose this prop firm is there's no time limit, and I'm perfectly okay with waiting, being patient. And with this type of indice trading, I have to elect to trade a little bit higher time frame model, which is like a 5-minute, a 15-minute model, where I can see an intraday swing rather than looking for short-term scalps. So that's going to be it for today. Until tomorrow, good luck and good trading, everybody. Be safe.